What's going on, guys? Welcome back to another video. So in this one, we're going to be getting into one of my favorite playbook setups, which is the trapped participants. This playbook setup is very common, very powerful, very useful, and overall just serves as an excellent way that we can use to actually validate that buyers are stepping in at demand and that sellers are stepping in at supply. And so with that being said, understand that the playbook setups that we're getting into in this video and the upcoming videos, they are only used for entry confirmations at supply and demand zones. I know I've said that a few times, but it's just very important for reiteration. If this information is presenting itself anywhere else, it's more so nuanced to me, and it does not play an active role in shaping my analysis. So, what is trap participants? So, trap participants presents itself in the market when strong effort is applied in one direction, but it fails to produce continuation, to where price then rotates the other way very aggressively, and it traps those initial participants that were applying all of that strong effort, and they are now forced to cover, they are underwater, and forced to cover their positions. And so the setup is visualized and confirmed through a B or P-shaped profile on the delta footprint chart. The B profile is used as confirmation to long the market from demand, and the P profile is used as confirmation to short the market from supply. So in this video, we're going to go over to Sierra charts, and I'm going to show you guys an example of the P profile. We're going to go over the chronology of the P profile, and this will just overall serve as an excellent way through this example to show you guys what it is in real time, and just that will allow you to understand how you can use it within your own trading better. And so I have this red box right here. There is a 5-minute supply zone here. If you guys want to go back and check for yourselves, this is on the 27th of March at about 9:48 a.m. There is a 5-minute supply zone that price is pulling back into. And so in this position, the context, location, and confirmation of this trade would be that the inverse volatility index is presenting weakness, therefore putting the S&P 500 in an environment where bears are going to have the upper hand and downside price action is likely to present itself, or where pops into supply, pops into resistance are going to have a higher likelihood of holding. We would then wait for price to pull back into our supply zone, which is occurring right here, and then using the P profile is something that we can use to actually validate that sellers are stepping in and reloading into sell positions, sell programs to defend prices at the supply zone to then lead prices back to the downside. So just some quick context for this position. Also, if you guys are concerned or confused as to why this says simulation mode, understand that we are in replay mode right now within Sierra charts, and if you're in replay mode, you are automatically switched to simulation mode within Sierra charts. So just some clarification there for you all. Okay, so I'm going to replay this data, and we're going to walk through these steps together. So a new bar is going to appear right here, and what you guys are going to see is step number 1, a large amount of aggressive buying entering the market, and so this is going to form the top of the P. Despite this effort, price is going to show very little to no continuation higher. In theory, if buyers are applying all of this effort, then it would make sense for them to be rewarded for those efforts. Prices should be able to move higher, should be able to print higher highs, higher lows. However, when effort is not producing a reward, such as we're seeing right now, then this signals that passive sellers are absorbing these aggressive market buyers. And so I'll pause this right here. We are now at step number 3. I say that this signals that passive sellers are absorbing these aggressive market buyers. We cannot be so confident that these passive sellers are going to be successful in their attempt to absorb and defend against these aggressive market buyers within supply until price makes a fast move to the downside. Under that condition, we will then have a lot more confidence in saying that passive sellers are successfully absorbing these aggressive market buy orders up here to defend this location. Just the clear distinction, though, is that we cannot safely assume that they have passively absorbed and successfully absorbed those aggressive market buy orders until price moves to the downside very strongly. And so what we're going to see here after all of this buying effort is that price is then going to fail, and it's going to fail to continue higher, and it's going to begin to reverse back to the downside. And so this is going to form the bottom of the P. And then once we see that downside move, I will talk about two important points about what's going on in the auction during this time. Okay, so at this point, we can talk about two things that are going on within the auction. So the first is that we can now safely assume, based off of this downside reaction, that these passive sellers are successfully absorbing against these aggressive market buyers. And so that is quite powerful information within itself. However, what we also understand is that these initial buyers are now trapped in a losing position. Put yourself in their shoes. If you are along the market at the 92s, such as many of these traders are for the lifespan of this bar right here, what would you do? I mean, many of them likely have their stop positions factored into the market down here. When price rotates against them, they are going to either be manually exited from their position, or their stop loss will do it for them. And so when that's happening, their exit orders, they become new selling in the market. And so since these buyers have to sell to cover, this is going to fuel the move to the downside, and it's going to add momentum in that direction. And so we understand that passive sellers are absorbing aggressive market buyers, and we understand that aggressive market buyers are trapped up here and they are forced to sell. So through this information, through the creation of this next bar, we now have some very powerful and compelling evidence that we can use to actually validate the thesis or the idea that sellers are stepping in at the supply zone. We can actually validate, let me backtrack. So the whole thesis of a supply zone is that sellers created that zone. There was an imbalance within the market where selling overwhelmed buying, therefore creating the imbalance. And when price comes back into that zone, we are then looking to see if those sellers, if that selling in the market is strong and showing intention through the order flow to defend that zone. And so for the two reasons that I've mentioned, passive sellers absorbing these aggressive market buyers, and that those aggressive market buyers are now trapped in a losing position and forced to cover, which acts as new selling in the market, can act as very powerful evidence that we can use to actually validate our idea that sellers are stepping back in at that supply zone. And so the confirmation for this is obviously what needs to be said first is that this is a P profile. So we have a bunch of aggressive market buying at the top, forming the top of the P, to which price then moves to the downside, forming the bottom of the P, resulting in a P profile. And so the confirmation signal to actually enter would be the formation or the creation of this new bar. So at this point, we can be short the market, risking the 87s, targeting above the area at which these passive sellers are successfully defending against these aggressive market buyers. And as you guys can see through this replay, this would have worked out very nicely for a move to the downside. It's about to, the velocity, the volatility to the downside is about to pick up. And this could have served as an excellent entry confirmation by using this playbook setup to short the market from supply. I'll speed it up here. And And so this thing ended up going down like 50, 60, 70 points on this day, but that is going to be a rarer case. I'm typically looking to make anywhere from about 12 on the lower side to, I would say, 50 points. That's more of an extreme or rare event. More typically, probably like 20 to 30. It depends on the volatility that we're in, the volatility environment that we're in. But yeah, I mean, this would have provided an excellent opportunity to take the market short from supply using the P profile. And so I'm not going to show you guys an example of the B profile. There's really no need. If you guys are attentive to this information and watching this, taking notes, it's quite easy to just flip this and understand once you change the terminology around. So like for a B profile, confirmation within demand, you would be looking at a large amount of aggressive market selling entering the market, and that would form the bottom of the B profile. Despite that effort from those aggressive market sellers to lower the value of price would show little to no continuation lower. And so that would signal that passive buyers are absorbing the aggressive market sell orders that are attempting to lower the value of price, etc., so on and so forth. I don't need to keep saying anything else about that. And yeah, that is the P profile and B profile. We're now going to move on to the second playbook confirmation that we can use to actually validate our ideas about buyers and sellers stepping in at supply and demand through the rebid and the reoffer setup. So I'll see you guys over there.